In November 2022, the world watched a $32 billion crypto empire collapse in just 48 hours. FTX, once the golden child of Silicon Valley, Wall Street, and global regulators, evaporated almost overnight. Investors lost billions, celebrities were sued, and the so-called genius behind it all was arrested in the Bahamas. This is the story of how Sam Bankman-Fried built an empire of illusions and why it was doomed from the very beginning. Before FTX, there was simply Sam, a math prodigy raised in a family of Stanford law professors. After graduating from MIT, he joined a Wall Street trading firm. But Sam didn't want to trade stocks. He wanted something bigger, something faster. So in 2017, he launched Alameda Research, a crypto trading firm that promised risk-free profits using advanced algorithms. But behind the scenes, Alameda was already showing signs of chaos.
Terrible bookkeeping, no risk controls, multi-billion-dollar positions tracked on Excel.
These were not accusations made after the collapse. These warnings existed from the very beginning. In 2019, Sam launched FTX, a crypto exchange built by traders for traders. It was fast, slick, and innovative, and it caught the attention of the biggest players in crypto. FTX exploded in popularity, billions in trading volume, millions of users, and a flood of celebrity endorsements. Even Tom Brady became a spokesperson. By 2021, FTX was valued at $32 billion. But there was a secret hidden in the balance sheets. FTX wasn't just an exchange. It was quietly funneling customer money into Alameda Research, Sam's failing hedge fund. Most people assumed FTX and Alameda were separate companies. But what investigators later discovered shocked even the most cynical analysts. There was a secret backdoor in FTX's code, a hidden mechanism that allowed Alameda to withdraw billions of dollars in customer funds without triggering any alarms. Sam denied knowing about this. But insiders claim the backdoor was intentionally built, and Alameda used these funds to gamble on high-risk crypto bets, real estate, political donations, and personal loans. By mid-2022, the hole was already over $8 billion. FTX was technically bankrupt months before the world found out. We didn't even know how much money we had. Everything was disorganized. Former Alameda employee The Domino fell on November 2nd, 2022. A leaked balance sheet revealed the truth. Alameda's assets were mostly FTT, a token invented by FTX. This meant the entire $32 billion empire was backed by tokens. They printed themselves. The crypto world panicked. Then Binance CEO CZ delivered the final blow. He tweeted that Binance would dump its entire FTT holdings. FTT crashed, Alameda collapsed, and FTX users rushed to withdraw billions. But FTX didn't have the money. The entire fraud was exposed. Within 48 hours, FTX froze withdrawals. The company declared bankruptcy. Sam resigned. Then came the investigations. Forensic accountants entered FTX headquarters and were horrified. There were no proper financial records, no list of bank accounts, no internal controls, no governance. Billions of customer funds were missing, and billions more were used for luxury real estate, loans to executives, and political influence campaigns. FTX wasn't just mismanaged. It was, as the new CEO described it, unlike anything I've ever seen in my career, John Ray III, Enron liquidator. Coming from the man who cleaned up Enron, that statement says everything. In December 2022, Sam Bankman-Fried was arrested in the Bahamas. He now faces multiple federal charges, including wire fraud, securities fraud, money laundering, and the penalties could add up to over 100 years in prison. Billions of customer dollars may never be recovered. and the collapse triggered a chain reaction across the entire crypto industry. Bankruptcies, layoffs, and investigations worldwide. The FTX disaster wasn't just a failure of one company, it was a failure of trust, regulation, and transparency in the fastest-growing financial market on Earth. The rise and fall of FTX is a warning. Innovation without regulation, ambition without accountability, and power without oversight will always end the same way. This is the $32 billion illusion of FTX. If you want more documentary breakdowns of the biggest business disasters in history, don't forget to subscribe. This is Money Mortem, and we expose the truth behind the world's biggest financial collapses.